China is huge for chip designer ARM. That's a risk for its new investors. As British chip designer ARM prepares to raise about $5 billion in an initial public offering (IPO) on Thursday, its China business has become a serious point of concern. The SoftBank-owned firm used many pages of its IPO prospectus to warn investors of risks related to its exposure to China at a time of rising tension between Washington and Beijing over chip technology. Its regulatory filing last month revealed that a quarter of its sales come from China, through an unusual relationship with an entity it does not control and with which it has a complex history. ARM China is an entity that operates independently of us and is our single largest customer, the company said in its prospectus. Neither we nor SoftBank Group control the operations of ARM China. STMicroelectronics STM32F205 Integrated Circuit Microchips, ICs, designed by ARM Limited, in a storage tray at CSI Electronic Manufacturing Services Limited in Witham, UK, on Wednesday, April 28, 2021. The global chip shortage is going from bad to worse, with automakers on 3 continents joining tech giants Apple Incorporated and Samsung Electronics Company in flagging production cuts and lost revenue from the crisis. ARM's IPO could value the chip company at $52 billion. Apple, Google, and Nvidia show interest. ARM, which is based in Cambridge, added that the scale of its business in China made it particularly susceptible to economic and political risks, which could be worsened by tensions between the country and the United States or the United Kingdom. The company has long been vulnerable in this area, which may have already contributed to a lower market valuation than SoftBank was expecting. ARM blamed an economic slowdown in China as well as factors related to export control and national security matters for slower growth in royalty revenues from China in its fiscal year to March. Total revenue from China did increase in that period, however. Royalties are hugely significant for ARM, which gets a fee from each chip developed using its products. The company relies on royalties and licensing for most of its income. SoftBank Group CEO Masayoshi Son answers a question during a press conference to announce the company's financial results in Tokyo on August 7, 2019. Japan's SoftBank Group said on August 7 its first quarter net profit more than tripled thanks to exceptional gains related to the sale of shares in Chinese e-commerce giant Alibaba. Photo by Toshifumi Kitamura/AFP. Photo credit should read Toshifumi Kitamura/AFP via Getty Images. ARM's mega IPO could be just around the corner, a year after the biggest chip deal in history fell apart. ARM said Wednesday it priced its shares at $51 each, raising as much as $4.9 billion. The tally could rise to $5.2 billion if banks exercise an option to buy additional shares, valuing the chip designer at as much as $54.5 billion. That's less than the $64 billion valuation implied when SoftBank bought a remaining 25% stake in the company from its Vision Fund unit just last month. ARM has declined to comment. Concerns about China are likely to have been built into IPO pricing expectations already, although a worst-case scenario of increased U.S. sanctions or trade restrictions probably is not. Kirk Boudry, an investment advisor at Astries Advisory, a Japanese investment research firm.